are joined by the management of Persistent System. We're joined by Sandeep Kalra, who is the Executive Director and CEO of the company. And we will be discussing a lot of things in terms of the ramp-ups, ramp-downs, impacting the execution, the margins that we're expecting going forward as well. Thank you so much, sir, for joining in with us this morning on ET Now. And obviously, I want to just start by talking in terms of the CC revenue growth that has come in. 2.9% versus the estimate of 3.5% on a quarter-on-quarter basis. So is this broad-based ramp down that is something that is impacting the execution of the company? What is it that we could understand from this?
So if we were to look at our overall results, the Q1 came in at 282.9%, which is a very healthy growth of 3% quarter-on-quarter, 17.1% year-on-year. This is dollar basis. In rupee terms, it is 3% quarter-on-quarter, 23.6% year-on-year basis. And please keep this performance in the relative context of the macroeconomic environment. I'm sure you are talking to other peers of ours in the industry as well. And this growth is relatively on the higher end of the growth curve, if you may consider that. Now, as far as we are concerned, there are always going to be puts and takes. In a macroeconomic environment like this, there is going to be new inflow and there's going to be some delays in execution, which basically are from the customer side. So we have seen a mix of that, but we are very happy with what we have delivered at the end of the quarter. The 3% is pretty much in line with what we were expecting to deliver.
Okay. Hi, very good morning, Sandeep. This is Shrishti joining in. So on your guidance, so is it fair to say that you will be at the lower end of your 3 to 4% quarterly growth outlook?
So look, we don't give forward-looking guidance. We had said that the range would be in good quarters 3 to 5%, in bad quarters between 2 to 4%. And look, we are trying our best within the hand that is given to us from a macro environment to deliver the best. And please keep in mind, this is the 13th sequential quarter of revenue growth and profit stabilization or profit growth for us. And for the last 2 years, sequentially, we have delivered 35% year on year. And the environment was different at that time. The environment is different. Whatever is the best possible in this environment, we are committed to delivering that. And that is reflected in our 3% growth compared to the industry from a quarter-on-quarter perspective.
Right, also just in terms of deal wins, was a bit lower in terms of 10% on a quarter-on-quarter basis, quite different versus your peers. What has exactly happened over here, and what's the sustainable deal number that we could expect from the company?
So from our perspective, look, if we look at year on year, the order book is a tad bit higher. If we look on quarter to quarter, yeah, it is a tad bit lower. But look, the quarter on quarter, there will be some variations. There was some delays in some of the deal wins. And please keep in mind, 80% of our revenue roughly comes from the US, where the first week of July was a long weekend. People usually club the last week of June with that. So there are small things here or there. If you ask me, are we worried about it? We are not worried about it. A little bit moving from one quarter to the other from a deal win booking perspective, that will always happen. So no worries on that front. And we are pretty reasonably confident. We are cautiously optimistic of our growth journey and we stay committed to that.
So that means you're optimistic. You say that you're optimistic and confident about the growth. So then what is making you worried, Sandeep? What's your expectation on the recovery and when do you see this bottoming out?
So if you look at even our own journey, if you look at the last 13 quarters, there have been several quarters where the growth was higher than what we have delivered this quarter. Obviously, that was a different macroeconomic environment. What we are trying to figure out in all this macro is, where does this start coming back into an accelerated growth? Now, in our discussions with our customers, they live in the same world. They are seeing the same kind of environment for their own revenues. And from our conversations with our customers and prospects, we believe in the next 1 to 2 quarters, they should bottom out and then the acceleration again will happen for them in terms of their revenues and hence ours. Today, most of the deals that we are fighting are around cost optimization. So that is where it is.
Also, just want to understand in terms of the margin miss, there was a miss in this quarter as well. What has led to this weakness? And in terms of margins going forward, what should we be expecting? What's the outlook?
I don't think it is a miss. So let me give you the margin walk. So we were at 15.4% from an EBIT perspective. Now, if you look at what we have delivered is 14.9%. Seasonally, if you were to compare the quarter with the earlier year, same quarters, you will find the same seasonality. There is a visa expense that comes in, which is for us this time about 40 basis points. There's a little bit more amortization that is there because of our own factors. And there's a very tad bit 10 basis points on doubtful debt that we have provisioned, being a conservative company. So that is what gives you the walk from 15.4 to 14.9%. Now, also keep in mind, we are one company among our peers where we have not deferred any joining of anyone in the company. We have already gone and implemented salary increments for our employees. We have done 7.5% average increase starting July 1st, which is our cycle. In India, we have done roughly about 3.5 to 4% globally in different geographies, depending on where it is. So from our perspective, we are delivering these margins on operational basis. We are not delivering these margins by cutting any, salary increments or deferring salary increments and so on. So operationally, I'm very proud of what we are delivering, and I'm pretty confident this is a stable margin, which we can obviously in the medium term, we are committed to improving it.
Again, Sandeep, when you say that in the medium term you are committed to improve, so when you say that you're positive about the margins, are you aiming to get closer to 16% of the EBIT margin band by the end of this year? Should we expect this?
So look, we have said consistently over the last several quarters, our aspiration over the medium term, which is the next 2 to 3 years, is to take our margin up at 200 to 300 basis points. Now, in the shorter run, with the macro where it is, we don't want to cut back on our investments. We'll definitely do cost optimizations wherever they are due, but we are not hung up on improving our margin in the next 1, 2, 3 quarters. We are more focused on making sure we focus on the growth. Growth is always difficult to get. Cutting cost and achieving margins, defraying or delaying, employee salaries and achieving margins, that is all very easy to do. Consistent growth is where the difficulty is. That is where we are committed, and that's where we are focused. So in the shorter run, we are basically embracing for the same margin, but consistent growth. In the medium to longer term, 200 to 300 basis points is where we are aspirationally going, and that is where we are committed to delivering. That's the situation on the margin front.
Could you also just give us some insight in terms of how various verticals and geographies are doing, whether the BFSI, even the geography-wise, the US and the Europe market, how is that doing?
Yeah, so from our verticals perspective, look, we will be a little cautious on BFSI. We are bullish on the tech companies that we have, the emerging verticals that we have, which are consumer, media, and so on. We are bullish on the healthcare life sciences, although this quarter was a slight dip in healthcare because of one particular customer adjusting their spend. They had a huge uptick in the COVID times. They are in the instrumentation space. And barring that, we are pretty bullish on the healthcare segment as well. So tad bit cautious on BFSI. Rest we are pretty reasonably, bullish on. In terms of geographies, US is our biggest market, continues to do well. Europe is a smaller market, so slight fluctuations can make a difference. But Europe has seen reasonably good pipeline. Even in rest of the world, we are seeing good pipeline. So we'll be more bullish on the verticals, as I talked about, technology companies, intersection with US and so on.
Right. Thank you so much, sir, for joining in with us this morning on ETR, giving us an understanding on what we should be expecting from the company going forward.